In this video today, we're going to look at the economic growth and equity market performance across the various regions since 2007. We're going to start with a look at the GDP performance, so economic growth performance across the various regions and with Australia in there as a comparison. So just to show you a little bit more clearly, since 2007, the Australian economy in real terms has expanded by about 30%, a bit over that. The US has been the next best at around about 17%. But when you look at most of the European countries, in particular Italy and Spain, you can see Italy, for example, about 10% smaller than what it was just prior to the financial crisis. So Europe has been a very poor performer, Australia quite a good performer, US also very solid. The story though, once you start to take into account what it is on a per head basis, and Australia has clearly benefited from very strong population growth over the period, and also obviously not having any recessions. Europe has had two, possibly three recessions. US has had two. Australia really only the one recent recession. But if we look at it on a per capita basis, and this is more of a measure of living standards, you can see in fact the best performing economy over the period only just has been the US, with real GDP per head up something like 14%. Australia then second at around about 12%. Italy still looks very poor, down 12% per head over that period, with Spain and the UK also towards a lower end. Interesting to note is the performance of Japan, which looks very poor in terms of real GDP, but on a per capita basis, given the population's going backwards, GDP per head has actually gone up by around about close to 6%. So that just paints a little bit of the background. We might just now have a quick look at earnings over the period. And what we'll just show the annotation. So what we're looking at here now is trailing EPS growth since 2007. And the standout, of course, has been the US market, with earnings up something like 70 to 80% over that time period, whereas pretty much every other region has seen, by and large, quite flat EPS growth. And once again, you see the case of Spain and Italy, where earnings growth is considerably smaller than where it was 2007, which, to be fair, was a peak level, but nevertheless, this is a good comparison period. The UK also very low. Australia earnings are still earnings per share still quite a bit lower than where they were just prior to the financial crisis. Another thing we can look at here is just looking at the PEs of the various markets since 2007. It gets somewhat distorted by the move in Japan, and in fact we might just take that out briefly. But in the period since the end of 2007, you can see obviously the US market PE multiple has moved from about 14 times to 22. But all markets have clearly experienced some PE expansion, although the US and Australia stand out the most on that basis. Now, if we just want to look at equity market performance over that period, putting some of those factors together, and of course it's the US that's been the major performer over that period. Market up, almost three times, what's that, about 180%, as you can see there, followed by the next two best, which will be the DAX. These are in local currency terms, and the Nikkei, so Germany and Japan performing pretty well, almost doubling over that period. But the likes of Australia, the UK, basically in line with where they were just prior to 2007. These are in price terms, local currency, and of course Italy and Spain still well below where they were. So it's interesting to note when you look at the sort of recent history that the US market really only started to push away from the rest in around about 2017, 2018. And I think as we saw before, and I think we can show it here when we look at relative PMIs in the more recent period. So what I'm showing here, this is just the US ISM. You can sort of see that since 2016, the recent recovery. But what's interesting is when you throw on it the European PMI, and you can see the two started to diverge pretty much in 2018 and clearly started to fall away. The UK likewise. So there was a divergence in around 2017, 2018. Tax cuts may have been part of that in the US, but also uh, you know, Chinese economy was slowing down a little bit at that point, and that was having an impact on European growth, amongst a few other, at the time, which were seen to be one-off type developments. So we're just going to finish off with a quick little discussion on some of the attributes of the various regional equity markets, and what we're going to look at here is the relationship between the 10-year annualized performance of the equity market and its sector weighting to IT. And I'm using that as a bit of a proxy of a growth exposure. And the US obviously has been the best performers we just highlighted, with performance up close to 12% over that period, and with about a 27-28% weighting to the IT sector. In the middle, you find Germany and Japan, which, as we saw, have been reasonable performers, about 8% per annum over that period. They've both got an IT exposure of around about 14-15%. And then towards the lower end, we've got the likes of Australia, UK, Spain, and Italy, I think, is hidden in behind one of those other sectors. So that's what's happened in terms of now in the current environment, where we're now starting to consider, well, which markets have got a higher exposure to growth. And if we have a look at what we're going to get is financials and materials exposure. And we all know that the Australian market has got a very heavy financials and a very heavy materials weighting. As you can see there, something like 35-40% in financials, and getting up towards 20% in the materials sector. So it outstrips all the other major markets. What about in terms of its relationship with the changes in global IP, and looking at the beta of EPS, trailing EPS, the changes in global IP, and we can look at that here on this. And this shows like Italy in recent times has had quite a high exposure, but if I probably look at a more of a medium term, a longer term beta of EPS to global IP, you can sort of see that Germany, Italy, even the UK are up there. Australia's sort of lagging, and the US towards the other end. So when it comes to sort of looking at those regions and markets that might be more exposed to an uplift in global IP, you start to look at some parts of Europe, and the US starts to sort of fall back. So we're at an interesting juncture. Obviously, a heavy growth in IT exposure has been beneficial to the US equity market over the past 10 years. Likewise, its stronger growth performance. But the period in the immediate future, one of a very strong global recovery, is clearly changing the background for markets just at the present time. So thank you for listening today, and we will talk soon.